Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good morning, good afternoon, good evening. Welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader. And as we do every Thursday morning, 10:30 a.m. Eastern Time, we're going to have a show with Anthony Crudele. How you doing, Anthony?
I'm doing great, Tom. I'm excited for this show, as I am for all the shows. But we're going to focus on the checklist before you begin to trade. And this is so important. And this is something that over time, it just becomes an instinct for you as a trader. You know, what your checklist is. It's just things you run through your mind. You think, okay, what do I have to do before the day begins? And I put together my checklist that I look for what I have to do before every single trading day.
Yeah, I think it's so important to have a checklist. And you're right. It does become something that you integrate. It just becomes part of a very important routine, right? What's the first thing you do when you sit down at your desk? Maybe even before you get to your desk, what are you thinking? But then when you sit down and focus, it's kind of a natural progression. I like your checklist here.
Yeah, I mean, maybe we just kick right off and go right into it. I put together a little picture of my checklist, and we're going to go over all of these today. And we're going to start off with big picture environment. And this is what I think about every single morning. It's when I write my note, my morning plan in our Discord. And I think about what is the big picture environment. And for day traders, some of you may think to yourself, well, why do I really need to know that? Does the macro matter? Do I need to know what the weekly or the daily is doing? Does that really play into what I'm going to do as a trader? And I can tell you this as a scalper early on in my career who was just trying to play for a couple ticks a day per trade, not for the day, but a couple ticks, maybe 4 or 5 ticks, on a bigger trade. You would look at that and say, why would someone who's scalping for really short-term points need to know the big picture environment? But it actually is the most important part of it. And I'm going to get into why that is. And then we're going to talk about market leaders, and because that's also important. We've talked about choosing the best index for you. And there's a lot of divergence in the tape right now. And that is an important thing to understand in markets, because anytime you have divergence, you're going to have push and pull. You don't just have push or pull. All right. And so market leaders is important. Divergence or convergence or confluence. And there's people use different names for when things are working together, confirmations. Right now we have divergence in the indexes, and you also want to look for divergence in indicators. It's very important, and because it's going to help you understand position sizing. And that brings me to the next thing, is risk parameters. And, my risk parameters change quite a bit. And you would say, well, why is that? Well, I do something that I think is not necessarily what a lot of traders probably do. And I actually will accumulate risk. So I will look at my month, and I will say to myself, okay, how much am I willing to risk this month? Let's just say it's $10,000. Okay. I might look at that and say, how many trades based upon what's happening in the market do I want to allocate that risk to it? Right. And people that follow me in my Discord or even on Twitter, it's all free stuff. You see that I'm not super active. I'm definitely more on the swing basis. When it's really busy and I feel like the market's really in a strong trend, I'm going to really look at my risk parameters a little bit differently, because I'm going to be day trading every single day. But if the environment and all the things leading up to it are telling me something a little different, I'm going to choose my monthly risk. And although that may change a little bit throughout the month on how I allocate it, right? It's not going to be per day. I use the number 10,000 is because it's a simple number to say if there's 20 trading days per month, it's 500 per day, it's 10,000, right? And so you might look at that and say, well, if I risk 10,000 per month, I might be risking 500 on a day, daily basis. But if I don't trade for 3-4 days, can I risk 2,000, 2,500, 3,000 of that 10,000? And that's what I do. And so I find times where I really like a position and I put more emphasis towards it, because to me, that's a time where I want to be in the market and I want to take advantage of it. And so my risk parameters are important based upon the things we've talked about so far with the checklist. Market focus, like right now I'm eyeing crude oil and gold a little bit. And so you want to see what they're doing. And you know that at some point you're going to have to allocate some risk to them. So you make sure you keep note of that. And like right now, I'm mostly focusing on NASDAQ and back to S&P. It was Russell. And, so it'll shift a little bit with the indexes. So you want to make sure you know where your focus is. You want to make sure you have a favored direction. And the reason why you want to have a favored direction is because goes back to position sizing. If I have a bias of direction, I know which side I want to trade more aggressively. For example, a lot of you have probably been in a situation where you'll have a support and resistance level going into a day, and you know that you more likely want to be long, right? And so you look at it and say, I'm going to be buying the dip, right? I'm going to buy the dip. You don't get a chance to buy the dip. The market rallies to resistance, and all of a sudden you put a full position on against the area, against the direction that you wanted to be in. And that's when you typically are going to lose money. And it just happens that way. So, if my favorite direction is one way, I adjust my position sizing accordingly. And strategy based on environment, right? And so some people will see me talk a lot about 3-minute opening range with the VWAPs. You guys all know, if you followed the show even for one day, you probably have seen me talk about that. It's a very important aspect of it. You'll also see me talk about daily Bollinger Bands. You'll also see me talk about 60-minute charts and accumulative VWAPs, where those have been over periods of time. And that is going to be based on the environment. Sometimes I'll look at opening range and be like, okay, it's maybe setting up as a trend down day or up day or a sideways day based upon the parameters I've showed you all. And I might look at the big picture and say, you know what, I'm just going to be really small now because maybe the short term isn't giving me what I want, but I want to be directional. And today just might be a day where I know I have to withstand it and maybe an opposite of what I think could happen. So I'll be really small and be more picky, or the opening range is really an important part of it because I want to be in a direction and I need guidance from the short-term charts. And so therefore I lean on it more because that's going to support how I would go about managing my risk. And so that's my checklist. And I think that for everybody, once again, this is my checklist, and hopefully you guys can take something of what I'm going to go over all of these and how I prepare for them using the charts. But and it's just like we said, Tom, it's instinctual. It really does need to be an instinctual checklist, because when you think even about trading rules, if you're day trading futures and you need to look at a piece of paper to see what your rule is and go, oh, well, hold on a minute, let me go see what rule number 7 is. You're screwed, man, because by the time you get there, it's too late. These things have got to become instinctual. And this list for me is just, I could spot this off at any time because it's instinctual to me.
Yeah. And I think for new traders, you have to understand that you will get to that point, right? It might be something new to you now. You might take away something you hadn't thought of now, right? What about market leaders? I hadn't thought of that. That's a great idea, Anthony. And so you can incorporate it in your checklist. But if you're 6 months in and you're looking back at your checklist again, maybe it's maybe put a little more attention into why these things happen. And once you understand the why, then I think it makes sense. This is what I want to do. It's like if you enter a room at a party, or you enter a room in a business situation, you just don't walk in and start spouting off at what you're there for, right? You have to read the room. You have to read the environment. You have to understand who else is in the room. And I think that's kind of what this checklist helps you to do, but in a futures trading sense.
Exactly. I've said many times, no two trades are the same. Why would you treat them the same? We've talked about this as well. If you make $10,000 in a month, or your risk is $10,000, doesn't mean that you have to make 500 per day. Doesn't mean you have to risk 500 per day. You have to understand market environment. And the biggest part of Develop Your Edge, and what I've tried and helped and hopefully taught many of you with your trading is that you're constantly working on this. You have to see what's happening. That's the difference between just being a trader executing a strategy and actually being a successful trader, right? I mean, anybody can come up with a technical strategy to trade. That doesn't make you a trader. What makes you a trader are these types of things: understanding environment. How do I position size? How do I allocate risk? What days should I be allocating more risk? What days should I be allocating less risk? And that, to me, is the difference. That's what Develop Your Edge is about. And that's why this checklist is so important. And I think what I want to do now is I actually want to go to the charts. I'm going to move this over here, and I want to show what the charts look like, because this, to me, when we start doing it, right, and when we start putting together our checklist, and so I'm going to leave this over here on the side of the charts. And what I'm going to do is I'm going to pull up the charts in just a second, and we're going to talk about how I go over, putting all of this together now, right? And so let's take a look at the charts. Let's start with the E-mini S&P. And so we have our checklist. And the first thing I'm going to look at every single day is the daily chart, the big picture environment. Why? Because why is this the first thing I do? Because this really sets the tone. I understand what's happening on the big picture. And I went back and said, well, as a scalper, why does this matter to you? So think about it from this perspective, especially as you grow as a trader. Or, even if you're a trader that maybe gets up to, let's just say 5 micros. We talk about 3 a lot. Maybe you get to 5 or 6 micros. Or maybe you get to 5 or 6 contracts, whatever. You get to multiple contract positions. What ultimately starts to happen is that even as a scalper, you're going to start to want to know, what side of the market am I going to have more people behind me, right? And that is so important to understand, even for a very short-term basis, because you want to anticipate that at support, you're going to get the algos, the big picture traders, the swing traders, all the stuff in that area. And you would think that's going to have a larger impact across the spectrum of traders, right? A real short-term little trade that you have that's not impacting the big picture brings in a smaller pool of traders. And so therefore, you're going to get less of a response. It might be a little quick response. You might get something, but you're not getting that full party response, right? And so that's why big picture matters, because it helps you with position sizing. Right now, what's happening in the market? So we go to the S&P, and I've talked about this quite a bit with these Bollinger Bands. They're 20-period, 3 standard deviations, and also I have a 5-day moving average. And if you look right now, you can see I put on this fib tool, which is 170, 50, 30, 0. And I discussed this a little bit as well. And we'll maybe, you can maybe go back and check out some of the videos as to why I do this. But this really gives me a breakdown of zones. And when I look at this, I go, the market is 70% off the bottom Bollinger, 30% from the top Bollinger. What other Bollinger Bands doing? And they're flat to potentially opening, right? And we're sitting at a 5-day moving average. This is a very bullish environment. And the reason why it is because you have 5-day moving average sloping higher. You are near the top part of a 3 standard deviation Bollinger Band. So you're almost within the top 30% of it, which to me is when you become very bullish, because you even potentially go and test that top Bollinger Band. And so you look at this environment and say, we are just grinding higher off of this sharp V bottom low. And the pullbacks have been very minimal, even on a day like today. And so right away, I look at that and say, I'm bullish S&P on the big picture. Shorts have the weaker hand right now. Everyone's looking for a modest pullback, and it just barely happens, right? Even with today. You look at NASDAQ, looks very similar. I don't need to draw the fib tools, but you get the gist. Top Bollinger Bands are open. I don't even have a 5-day moving average up here. This is just to really get a quick glimpse of it. You can see that the NASDAQ's near recent highs. What most likely is to happen is that, doesn't mean it will happen, but probably start to run this high at some point and probably go to test that top Bollinger Band opening higher, bottom lower. And anytime you see that, that's range expansion. Big picture is leaning towards bullish in NASDAQ, right? And I'm just going through this relatively quickly because this is not about me going over the details of how I do this stuff, right? This is more about understanding the checklist. Going here, and Russell's sideways, if anything, a little bit weak. So now I'm not going to go into Dow. I don't need to, but you understand the big picture environment. I look at it and go, okay, what's happening here? And then I go to the next one, which is market leaders. Well, who's the market leader to the upside, right? It doesn't take rocket science to know it's NASDAQ, right? Because the NASDAQ is the strongest market so far this year. Right now, it's been the leader to the upside. It's had the strongest percentage move, strongest points move. Obviously, that they go in tandem. And the Bollinger Bands mouth is opening very wide. The Russell's the weak leader. It's the one that's holding the S&P back. And then you have the S&P, which although it looks very similar to the NASDAQ, maybe not quite as bullish because that top Bollinger Band isn't expanding quite as much. But nonetheless, the S&P is reacting more off of NASDAQ than it is of Russell. So I have market leaders in my mind. Weakness is led by Russell, sideways action Russell, big picture upside leaders, NASDAQ. S&P is closer to NASDAQ. If I'm trading S&P or NASDAQ, those two, as most of the time, are going to be more closely tied. Divergence or confluence or confirmation, divergence, right? It's divergence. You have NASDAQ strong, Russell weak. Bottom line, in bull markets, you don't get the cleanest moves to the upside or the downside in bear markets when you have divergence. It's just the way it is. It doesn't matter if the Russell stocks aren't in the S&P or NASDAQ. It doesn't matter. It's about the rush to get in. You don't get the cleaner moves when you have divergence. It's just the way it is. Look at what we've been the last 3 months. We're going to go higher. No, we're going lower. We're going to go way lower. No, we're going higher. And this is divergence. This is what happens a lot. So understand that environment. We get near overbought or near oversold with no follow through and the market comes back, right? Now we get into risk parameters. And so this is something that where I look at it and go, and I haven't done anything really this week. And I want to go to, I'm going to pull up Trade of 8 and I have this up on Sim. Okay, I'm always doing the live trading in here. I have Sim up today because I want to put some orders in a simulation mode to understand risk. This is one of the things that, you know, because I'm not, as much as I love all of you guys, I'm not going to do it live and lose money just to show you how I'm putting something in, right? And so I want to talk about why this is how I look at risk and when you look at the E-mini S&P and how I would look at something, right? And so we're going to go to the short-term chart, and what I want to talk about is if you have a bullish look in the market, like we said, S&P and NASDAQ are bullish, but we've got some divergence with the Russell. Today is set up as a trend down day, which is going against my daily chart, right? Because my daily chart in S&P and NASDAQ, I said, are bullish, right? Whether you agree with it or not, doesn't matter, but that's my, the way I'm looking at it. And you come in, you have a trend down day, and you go, okay, I want to potentially buy them here. I want to try and find a break, but I'm going against the trend. So it's really why I haven't done anything today, but I want to show you how I would allocate risk and understand a couple of things. When you have a trending down day in what you would consider a bullish market, okay, you want to buy at and below support. I'm going to say this again. When you have a trending down day within a primary uptrend day, you want to buy at and below support. Why? The reason is because today is set up as a weekday. So you want to use that weakness to get better pricing. If it's a trend up day, I'm going to try and buy at support or above support because I want to try to make sure I get in. So on a day like today, what I look for is this. Let's just say hypothetically, I want to be long on a trend down day. I think we're going to go back to VWAP. VWAP's 95.25. I have 84.25 is the bottom second standard deviation, right? What I want to look for is, and I'm not going to buy above 1 standard deviation. I'm going to buy between 1 and 2, as close to 2 as possible. And I'm going to put my stop just below it. So my stop is going to be, let's just say 83. Okay. But I'm not going to buy anything above the standard deviation into a rally, right? I'm not going to buy into a move higher. I'm going to buy into a move lower and try and buy at and below pricing. And let's just say hypothetically, my risk is $500, right? So you have E-mini S&P stop at 83. So the first thing I'm going to do is because I'm going to put some orders in. This is why I wanted to do it with Sim. So right, first standard deviation is 90, right? And so I'll just say I'm going to buy one at 89.75. We'll see if I get hit. And actually, let me just get one in at 90 just so I could get the fill in. Okay. Now you can see, what did I say I could risk is $500, right? My stop is 83. So it's $350 of risk. And I put this on here on purpose so you could see $350 of risk, right? What I know is, and I could see in here, this is actually on Tradeovate, which is NinjaTrader owns. You can see in here how much I could risk per getting up to my 500. Where would I allocate my $500 risk? I want to keep my $500 risk because 84 quarter is down here. I want to try and buy another one as close to my stop as possible because I want to get my risk. I want to get as many contracts as I can on as close to my risk versus further from my risk. So what do I mean by that? Instead of buying an additional one so you say this is 350. So if I were to buy an additional one, let's just say at 88 to 83 is 5 points. It's $250. I'd already be over my 500. I can't buy there, right? Where could I buy 86? 86 to 83 is another 150. I'm probably going to wait and buy another one at 85 on a new low and maybe another one, let's just say at 84. This gives me, if you put in your stop here, right? 1, 2, 3. I've got 350 on the original. I've got 100 on the 85, and I've got 50 on the 84, which gets me to 500. And the reason why I'm using this as an example is because I might start to buy something right at standard deviation 1, but I'm going to potentially add as close to risk as possible. So who knows? I know it's really close to a really potentially tight stop, but I know I'm wrong right away. I allocate my risk. That's it. It burns me out. I am not going to be adding to any sort of position into a move higher. And maybe you would go to micros or something to take that risk down. But the point of it is you know how to allocate risk on that day. I am not going to buy into a rally on a day like today. I'm going to buy into a break because I think as we start to go lower, second standard deviation holds, right? And maybe we get a bounce back up to VWAP. That's something to think about. Okay. And so maybe, Tom, I bring you in real quick about this. I know we're running a little bit short on time, but that's an important point as to why I lead up to that.
Well, and that's the importance of knowing what your bias is going into the trading day, long-term bias versus short-term bias, right? You're long the long-term, but we're seeing it's a down day. You don't want to buy into headwinds, right? You want to give yourself as much room as you can to get that better price, realizing on a down day, you're probably not going to see an explosive rally. So why would you buy towards the higher end? You'd want to buy at the lower end.
Exactly. And you get that from these beginning check marks. Then you go market focus. What is my market focus? S&P and NASDAQ, right? And so the risk parameters part is where it is in the checklist is not necessarily the trading aspect. It's in my mind before I trade, right? That's so just so everyone knows, I'm not trading and then going, oh, what market focus do I have? Market focus is also, is obviously before you're executing. And I look at it and go, which markets do I want to be long, S&P or NASDAQ? I'm not trying to buy the Russell today. Russell's a two-way tape. If anything, I look at the Russell on extremes and I can buy it or sell it. Most likely it's just a two-way tape. It doesn't have clear direction. So I'm favoring NASDAQ and I'm favoring S&P, both in my favorite direction to the buy side. Strategy based on environment. This fits in also to all of this. Right now, I'm really leaning a lot on the 3-minute opening range and the VWAPs and the standard deviation bands. Why? Because right now, we are in this part of the market where we're digesting, right? And we had this big move higher, and it's not just trending up. I think that we can rally, but on a day like today, with a trend down day, I can't just step in and be long based off of the daily chart. I can't swing position long when this day is indicating short to me. If this was a trend up day, great. I would just be more aggressive to the buy side in as fast as I can and try and hold them. But because it's a downside day within trend, the 3-minute standard deviation bands and opening range is important to me because it's really helping me understand the type of day it is. And really the short term could almost start to shift what that bigger picture bias is, right? And we'll see how the day unfolds. But, for me, the shorter term parts, shorter term strategies are really important because they help guide me. Right. I mean, like a day like today, if I just looked at the daily chart coming into the day and I didn't look at what was happening here, I might have already been long. Right. But this told me not to. So I haven't done anything. And so that to me is and you look at the checklist, it really is they're all really kind of working together in a lot of ways, right? It's just building that, what everyone talks about, discipline and patience, that all stems from this, because this is what gets me to that point of discipline and patience, your checklist.
Yeah, I completely agree, and I like how it's, in a natural progression, kind of big picture to smaller picture at the end, right? To the focus. When you say market focus, when you say risk parameters, those are still kind of mid to high to mid level views that you're taking, right? They're kind of, it's really when you get into the favored direction strategy based environment is where you get into those very focused, very small term. I don't mean small term in a bad way, but as 3-minute charts, I'm going to really be in the moment. But everything leads up to that. What your mentality is going into that smaller environment, right? You have to kind of put the trees that you see here in perspective of the forest of the bigger picture.
100%. And, going back to this Dome, something I could talk about is like, for example, let's just say, once again, this is why I wanted to have this up on a sim today, to show you some examples of just clicking in. Let's just say it's a bullish day, right? And let's see what the RTY. So the RTY, none of them are really giving me anything really. Okay, so here's NASDAQ. So maybe we go to MNQ, right? And look at this beast. So the NASDAQ is a back above VWAP, back above opening range. Let's just say that, hypothetically, this is not a trade I would take. So don't use the setup as an example, but understand the risk parameter aspect of it. Let's just say that I could risk, I'm going to do a 5 lot here because it's MNQ. I'm going to get up to 10 and I could risk $300, right? Or $500 again. And I want to lean on VWAP. And I know that VWAP, we're going up. I want to be able to buy momentum. I have a bullish outlook. We're above VWAP now for the day, and I want to get in. Oh, it just got above it. I didn't have a chance. That's when you step in and you buy blip fills, right? And you look at it, and it's not showing the risk parameters. Let me do this. Oh, I have to go back up to settings. Doesn't matter. I wasn't prepared to show this on here. But the point is like, now I'm going to be really aggressive right above the 82. Which is the VWAP. And so now I'm going to try and buy another something right in front of it. Now I'm getting above my level is the point I want to put, right? And I say, okay, I'm in above this area now because I'm trying to go with potentially the upside leader. And so therefore I allocate my risk quicker in the market versus on what I showed in the S&P, where I'm more like, oh, I am really waiting for price to come to me. And that's the difference. When I talk about risk parameters, and this is why it's so important, because you might get a trend up day in an uptrend, and I know many of you traders out there have probably been in this position where you're like, oh, I'm waiting for it to come to support because I'm going to be disciplined, and you don't get in. That's when you have to either you allocate the days where you did nothing. Like for me, I did nothing. I allocate my risk to a more important day because now I have what I want and I make sure I get in, right? And so therefore, I'm willing to pay up in price a little bit. I'm willing to widen my stop a little bit. I'm willing to put on more risk because I need to be in this position. And most of the time, if you're right in that position, you're not going to get near that stop, right? Because it's going to work out in your favor if the market respects your work in that exact moment. But that's the point of it, right? And most people are allocating more risk when the market's giving them more opportunity and price. And that's the opposite way to think. Because if the market's letting you buy all the dips you want today in the S&P and even in the NASDAQ, because it's set up as a downtrend day, but this goes back to like, look at this move down lower in NASDAQ. It's why you don't chase rallies in a trend down day in an uptrend market, because you have to let price come to you in this situation. But there are other days where it's going to be the opposite and where you have to just get in and you have to allocate your risk parameters accordingly.
Well, appreciate that, Anthony. And don't apologize for using the sim. We use the sim all the time, for our purposes to show you, what we're thinking. So totally agree with that. I know we're running up against time. Why don't we just go into the business you have with the CME?
Yeah, CME just announced micro Henry Hub natural gas. Not announced, but they're actually they're live now, which I think is a great product. And it's the MNG. and they're in these right now. And everybody talks about trading energy markets. You've got a lot of geopolitical things going on right now. And natural gas was a bigger product, probably too big for most retail traders, but not anymore. They've got micro Henry Hub natural gas. And I just want to make sure that your traders out there knew that, because if you're going to get into the energy market, I highly suggest starting with micro crude oil and micro natural gas, because these bigger products are a bit they're a bit expensive, I think, for retail traders. And I think this is a great way to get in. And it's also micro options as well. So I think that this is really great. I'm so glad to see CME do this, because it allows people to get into energy markets that most likely they wouldn't have never have gotten in, because you're not going to just come in and just start trading natural gas or crude oil without some exposure to it first. And this allows that.
Yeah, I agree. It makes that transition from simulated trading to a live trading a little more easier when, a little easier when you can have the micro contracts. No, it's a great time, and great timing for natural gas too, right? To do that. This is the time where you start to see a little more volatility in those markets. So thanks for that. And Anthony, I think you covered so much today. Hopefully viewers, you might have to rewatch this one, right? And watch it until you get it. I think there was a lot of wisdom here, and appreciate you sharing that with us, Anthony.
Yeah, thank you, Tom. And I plan on doing more shows with specifically focused on that style of risk of adding, scaling in, scaling out. I know we've done that, but it's one of those things where it's going to take time. And, if you are confident in your planning and you got your checklist together, it really all comes down to your execution after that. And it's what will create that discipline and that patience for you, and really become a better executor of your strategy. Because ultimately, at the end of the day, I've said this a million times, everything works sometimes, nothing works all the time. And so you as a trader, how you grow and actually become a trader is by understanding the times through your checklist, through your preparation, and when you could step on the gas and when you step off the gas. And to me, that's really the defining line of really, I think, becoming someone who's just on sim or just barely paying the bills or barely making money as a trader to actually becoming full-time traders. I'm sure that's many of your goals.
Awesome. Thanks so much, Anthony. And thanks to the viewers for coming. We'll be probably diving into the archives next week and the week after, but then Anthony will be back in 3 weeks with some new content. This afternoon, we'll have Mike Burke finishing the day with bars closing. So in the meantime, have a great trading day. We'll see you then. Take care.